All right, good morning, everyone. Richard here, and welcome to the Wednesday edition of the Morning Bell. Right, guys, we have two nice days of upside on the ESNQ crude oil, as well as, crude oil a bit longer, and gold as well. So we're going to be looking at these markets as always. When we look at the charts using my market geometry techniques, try to identify support resistance areas where price might be moving towards, and as well also look at the dollar index, which is also nicely reacted from that resistance zone we identified previously. Before we dive into the live charts, quick look at today's economic calendar. The ADP non-farm employment change figures were already released half an hour ago. Came a little bit better than expected, but more emphasis will be placed on Friday's job numbers, I suppose. And then a little bit later on at 10 a.m. EST, we get ISM services PMI numbers coming out. So if you've been following a lot of the economic news, talks from the Fed, etc., then they did say that we could probably expect some hard times in the economy, right, due to the rise in interest rates that they've been pretty aggressively hiking for quite a while now. So it does seem that Wall Street's kind of betting on some sort of bad news. Yesterday's JOLT numbers, for example, came in way lower than expected, which might be an early indication that the labor sector is cooling down. So, will this influence the Fed? I don't think it will influence them by not having more interest rate hikes. I think they will have some more, like they obviously have planned before, but it might not be as hectic or aggressive as they've done previously. So it might also be a little of a reason why the markets have moved to the upside again. Prices has mostly also reversed from areas we identified beforehand. So yeah, very, very interesting to see. Now the question is this just a relief rally, a corrective bounce, or are we heading to new highs, all-time highs? I mean, way too early to say for that, but the expectations still are. And like I mentioned, that we're probably going to see a bounce after a break of these lows. That did happen. Obviously, we're looking at the ES on the daily here now. Guys, I just changed the colors of these pitchforks a little bit, just so it's easier on the eye, hopefully. Let me know if it's not. Yeah, just so we can distinguish between these lines a little bit better. I do have to say that quite often, things can get a bit cluttered with all these lines on here. So, but anyway, if you do follow along or have been following along for a while, then I'm pretty sure you should understand what I'm looking at here. If not, then ask there in the chat box, and I'll be more than happy to answer for you guys. All right, I'm just checking if my live stream to YouTube is working well. Seems to be okay. By the way, we're sitting without power here. I've got a backup system running with the inverter and battery system, so hopefully the Wi-Fi or the internet connection will stay on during the session. Thus far, everything's running okay, so fingers crossed. Anyway, the ES, as always, we've had, which is now these purple lines, a standard pitchfork using the three most prominent anchor points prior to this decline that we've been seeing this year. Pretty wild one, up and down, up and down, up and down. I'm still viewing this as corrective. During the June time frame, when price hit this low red warning line of this pitchfork had tracked this correction to the downside, we had a strong move to the upside. We thought that might be the start of a five-wave move that could take us to new highs. Obviously that failed, and bam, we went lower. And at that stage, I said, should I rather say, that I was thinking that we're potentially dealing with an incomplete correction, i.e. a WXY, which is basically a double zigzag, for those that are familiar with Elliott wave theory. Now, I also mentioned that watch out, that if we do break these highs, we could potentially see a reversal to the upside. The thing is, it just didn't happen exactly. It doesn't really have to be exactly. Price didn't really reach this low red warning line like it did previously over here. Okay, and let's just quickly go to the 4-hour chart. Price obviously bounced to the upside, and when was this? I think it was on Monday. Let this just load a little bit. Hopefully no internet issues while we're doing this. I mentioned that we're dealing with, see, let me just take that snap mode off, a pretty, how can I say, violent A, B, C, D, E, which might have ended now and we could head lower again, or, and that's now being an expanding triangle, which I forgot to say, A, B, C, D, E, and then we had this move to the downside, which then already broke those previous lows in June, but came very near to this low red warning line. So that seems to be the case. I mean, this could also be an E wave up here. And E waves of an expanding triangle does tend to overshoot the upper area, in this case, whilst moving upwards, the upper trend line or shape of the expanding triangle. Thing is, we're also sitting with this lower green median line of that pitchfork sloping to the downside, currently at 3,832.5-ish. So that could also be an area where price might pull back into. Also where these previous lows found temporary support at that median line. This could now have been support turning back into resistance as price moves back into there. The question is now that if this was an important low, then I just think it's an important low within the context of this larger move to the downside, which I don't think is incomplete. That doesn't exclude that we might get a bounce that even extends much higher than currently. So I do think Friday's job numbers will kind of give us a good idea of where price might move towards over the near term. You know, if those numbers are really bad, then in this case working in reverse as it normally used to do, we might see price move even higher, maybe giving us similar sort of moves than what we've seen here previously. Moves like this. Right, so this is just a little blimp, probably getting everyone excited. But if this is what I said was an A expanded flat B and a C for W, that's your first ABC. Then you get a WX wave, which was an ABC to the upside. And then this could potentially just have been this leg, similar to what we've seen here. Something like this, or something like that. Meaning that there is a potential for, if price continues higher, breaks above, let's say the 3,832.5, which is this low median line, to move to the next one, or even higher again, maybe even back to this center median line of the same pitchfork. Now these pitchforks I'll keep on my chart for a very long time until price actually starts breaking either one of the upper or lower red warning line, depending on which direction price is going. And obviously this very long term one, which I colored it in purple now, I'll leave on there because it just used so much, it's been drawn from areas way back in time. So although it reacted there, it broke below it. Not unusual to see price undershoot or overshoot depending on the direction of one of these lines. So anyway, what I'm thinking is resistance here. If price moves lower again, we got support around about 3,698 again. But again, maybe if these numbers are bad on Friday, we'll probably or maybe see a move higher. That could be similar to some of these moves to the upside. And then get everyone very excited that this, what I'm still viewing as a correction, incomplete correction, is over, just to be met by more selling pressure at some later stage, and then probably see very strong reversals again, sort of V-shaped tops or inverted V-shaped tops like we've been seeing all the way down here. Sharply down, sharply up, sharply down, sharply up. So I expect this to continue. Although, like I said, I can't rule out, I do think we're probably going to get at some later stage, either now or a little bit later, higher bounce than what we've seen currently. That's my expectations Obviously, we have to go with the flow and see how things materialize as time passes. Okay. Cool. No more questions yet. NQ, same thing. I changed the colors a little bit on that long-term pitchfork, although this one looks extremely messy. But in any case, same anchor points I used previously in the previous videos. Yeah, we had a little bit of momentum divergence, which I didn't show on the ES now on our MACD divergence indicator at that low, and price pulled back into this downward sloping low median line, similar to what happened previously. Resistance and support. So it's sort of now in between this low median line of that long-term upward sloping pitchfork and this low median line of the downward sloping pitchfork. So that is a strong area of resistance in my opinion. Again, same thing with the NQ. They're all going to follow suit on the indices of what happens on perhaps Friday. Are we going to meet resistance? E is still not really there at that resistance area, so maybe a bit more upside before we hit into or head into Friday. Or NQ can just start moving lower from here. Alternatively, this was the first bounce higher, which is what I'm still thinking is possible, followed by potentially a retracement, and then we'll see if we can make another move back upwards. It's not too much to say on NQ. It is now really stuck between two very strong market geometry support and resistance lines. So yeah, let's see how the day goes, and we'll obviously recap these charts and have another look at them on Friday again. Next up, crude oil. Guys, so this is typically what I've been looking for. If you've been following these sessions for a while now, then I think you should have a good idea by now what it is I'm looking at. We're looking at areas of confluence with sort of patterns, formations, trying to figure where, in combination, should I say, with each other, analysis, to see if, you know, these areas could act as support or resistance. In this case, we had this lower channel line, the blue one, and the lower median line of this pitchfork sloping downwards. Confluence area, also with some sort of a 5-wave pattern that moved into the area, and we had a very strong bounce to the upside. On the crude oil side, running into this dashed median line over here around about 87.24, which might act as resistance. This red box I have here is where all these previous lows materialized previously. So a lot of resistance could potentially be within this zone, and now really depends if crude oil can prove itself and break upwards from here, especially if this 1, 2, 3, 4, 5 wave pattern is true, which by the way it does look like it could be. Remember I said that we probably have seen some sort of a leading diagonal shape. Although I know I'm undercutting all of these lows over here, but I did also say it doesn't look to me like a ending diagonal. We might be proven wrong. If it was an ending diagonal and price broke above the upper limit, in this case in the bullish scenario, above the upper channel line of an ending diagonal, then you'd expect a very sharp move generally back to the upside. But like I said, just by looking at the pattern or the potential pattern shape, I know people like to see patterns and things. Sometimes they see patterns where there are no patterns, and that's especially true in trading. But that's why we use a combination of market geometry with pattern analysis to figure out areas where we might get support. So if we see a break above that 87.24, did I get that level right now? Plus minus 87.52-ish. Then the next area of resistance would potentially then again be one of these angular channel lines that's been on my charts for, well, more than a year now, around 92.82. Alternatively, we might just see price move lower a bit. If this was a 5-wave sequence, then expect a much higher retracement of this move to the downside, potentially even back to the 38.2, which is just slightly below today's current candle and below this angular channel line over there. Alright, so I still think 5-wave move. I also mentioned maybe that this was the 3rd wave, that potentially being the 4th, and then the 5th wave. But we're dealing with these areas where price hit, and I do like this idea that we've potentially seen a 3rd, a 4th, and a 5th. Also on the economic news side, with crude oil, the OPEC meetings are taking place today. There have been talks about reducing or cutting production. I don't know. I've heard figures from between 1 million to 2 million. Some are saying 500,000 barrels a day. Who knows what the story is? But if that is true, this might also be the rumors that came out, I think, prior to today's meeting. Also, we have crude oil inventories a little bit later. That has been driving this market upward. Again, and you've probably heard me saying this before, it's not unusual for price to pull back into an area of confluence or market geometry, and then you get some sort of a news event or rumor that sparks, some sort of jump or decline in a market that generally after price has hit one of these areas, which is pretty cool to see. Don't ask me how that works, but it just it's something I do see over and over and over while obviously studying this type of analysis for a while. And now I went ahead and deleted that. Before we look at gold, let me just get it back again. Sorry about that. Let's see if I can get that high properly. There we go. Yeah. All right. Oh, that's not done properly. It snapped to the wrong area. There we go. Sorry about that. Any case, yeah, it does look 5-wave pattern, all I want to say, and we do have a little bit of resistance overhead right now, but above that we could head back to the 9282 to retrace a decent part of this. If this is a leading diagonal, then potentially after a corrective bounce we've seen, might see even a much stronger decline to the downside. Okay, but both sort of things I'm thinking at the moment, whether this is just corrective and we're going back to new highs, or the start of a much deeper move at a later stage. I'm bullish over the near term. That's all I really wanted to say there. Okay, second lastly, gold. And I've done a little bit of extra analysis here on gold. Let me just see if I still have that on the chart. Also a little bit of divergence. I don't know if you've seen that on the MACD at this low. We had a small support zone where price has bounced back up from. Price shot all the way back to the upside and now again has reached the center median line, which previously acted as resistance. It overshot it there. And quite often when you see a price overshoot and it reverses or overshoots again, it normally does it by the same distance as it did before. This is why I ran a parallel line to one of these median lines, adjusted it to that high, and this is where these previous highs came in. We thought that we're going to see a potential 5-wave move to the upside. We didn't get that, and it all happened from where these previous lows came in. Lows turning into resistance, or support turning into resistance in conjunction with market geometry, overshot by the same distance as it did before. So if gold manages to break above the center median line here, where it is now lying right at 17,734-ish, give or take. Let me just get rid of a snap mode again. Can sometimes be a little bit of a pain in the behind. 1733.20. We do make a move above there, then it might just be that price pulls back into this angular line that I copy and pasted to the upside, running at the same angle, and that resides at around about 1748. We'll have to update these lines because they're sloping downwards. As time progresses, they'll have to be updated to the downside. It's a very strong move, eh? And there's been no sort of corrective moves in between. But, It's much easier when you work with corrective moves that makes nice zigzags and expect that it might end into an area, and then you trade, let's say, low or high, whatever your directional bias might be. But it's the same with the ES and NQ with these volatile times where things just go one direction and snap back in a different direction. So at an area of resistance which acted as resistance before, in the bigger scheme of things, before I look at the dollar index, and this is something that's very interesting I wanted to show you in the weekly. Before we show you that on the market geometry side, I still think that, or hope that, this was a 1-2, this was a third, and all of this myth is just a very deep fourth wave correction with a potential fifth wave up to follow. Although very deep corrective move, but it has to stay above this high for this to be a 1. If this is a fourth wave, then it would be invalidated. If it's not a fourth wave, it should prove that it's not a fourth wave, should I say, if price moves into 1,581 and 70 cents, i.e. into the area of where I labeled this first wave. Or alternatively, like I mentioned previously, this could have been a 1, a 2, and the commodities, very often you get that your third waves aren't necessarily the longest, and that we've seen something like this, and that now price either ended the corrective move which only actually made it to the 50%, or could potentially still move to the 61.8%. And if it does that, you still say above this area, or if it's just an ABC, I'm still seeing this as just a corrective move, then after a 5-wave sequence to the upside. So at a later stage, I'm expecting upside potential. But been very difficult to figure out what's been going on in crude, gold, especially after this extreme messy movement. So, but that being said, we did do a pretty good job to find where support resistance might meet the price during its way to the downside. Now you'll see that there's a very long wick on the weekly. So on the daily, obviously price moved up here, and then during that week, on a weekly basis, towards the end of the week, price closed to the downside of that weekly range. Now, if you were to use the highest closing price, which is something you can do sometimes in market geometry, although you need to be careful that you're not, again, trying to see things that are not there. But what's very interesting, if you use that instead of that wick on the weekly, then price already reached this lower median line over here. And even if you look at the stem of the fork all the way back, another indication that this could be a potential setting to use. I won't say setting, is still a shift pitch fork, but the right anchor point, should I say, to use is, look at how beautifully price has respected the stem, or we say the center median line, as well as the center median line over here. Support upper 50% dash, break lower 50% dash, back to center median line, and potentially now that could have been it. So before I side with this setting, again, I'm always very wary. I'm trying to see things that are not really there, like I mentioned before. I want to see now what happens with price at these levels that I've drawn using that anchor point. Okay. Oh, sorry, not that anchor point, the downward sloping green pitchfork. So, yeah, like I mentioned, 1,733 plus minus area of resistance currently. A break above there, we might see a move to 1,748. All right, that was gold. And lastly, quickly look at the dollar index. Not much to say. Again, this is like end of day data. I don't have live data for the dollar index. NinjaTrader doesn't provide that for some reason. But in any case, price did reach an upper channel that I doubled up using important previous highs and lows. prior obviously to this massive spike that we've seen to the upside for the entire year, 2 years now almost. And as price reached that upper blue line, we had or identified a little zone between 114.17, 115.97, where price moved into, and this is again now on the weekly. Price already broke below last week's lows, the trading range of last week, and I think this might be that reaction that we've been waiting for, which has also obviously been helping gold to shoot back to the upside. So is this going to be sustainable down to the downside? I would say if we do continue moving lower, that the center median line as well as this channel line will potentially be an area of support, plus minus 106.96. This will obviously update as time goes by, but if we do get a move into there, that could potentially be where we see another jump back to the upside again. Price has not reached this upper green median line yet. So this could be that this impulsive structure is some sort of a third wave of sorts, potentially a corrective move with another move to the upside. It could be, touch that upper median line at a later stage. So this I'll label next time for you guys. Could definitely be a zone that if price pulls back into it, like I said, that could act as support. Did I get that right? Now let's make that line. Yeah, okay. Right, guys, that actually concludes today's session. I hope you all have a fantastic rest of your day. Again, if there are any questions, please let me know before I sign off. And if we're not, then I will be back again Friday, same time. And as always, these sessions are recorded, so if you can't make it, visit our YouTube channel, please subscribe and hit the like button, notification bell, and you can watch the recording afterwards. Alright, I think that's it. Concludes today's session. Thank you very much for watching, guys, and until next time, take care and goodbye.